Introduction to IRS Tax. Tax Intro, Series 1. IRS History.
Hey, welcome back. I wanted to go over the income tax form as we have it today, the history of it. A lot of clients will ask me, well, where did this thing start? Why are we getting taxed? And we don't have to go through the whole American history of the colonies from England, which were actually encouraged by the British to help stake out U.S. so the French wouldn't take over. But the colonies ended up building their own little system, the 13 colonies of taxation, to help them organize. They had their own letters of credit or IOU between themselves to help them do exchanges and barters. The British noticed that they were making money among themselves, and they started enforcing like a stamp tax. Every time something had to be done, you had to stamp something. So the British said, we want a piece of whatever you guys are making. So all the colonies had to collect all their tax, report it to the British representatives there, and they had a big percentage went back to England. Well, this went on to a point where everyone got obviously fed up, and that phrase taxation in England without representation became a big issue, especially when they started taxing tea and other imports, so the Boston Tea Party, etc. So that's a short history, but what happened is after the Revolution, the federal government had no way to really bring taxes together. So during the Civil War in the 1800s, the federal government just had no money, and they had to figure out a way to go and collect it from all of the states that were organized. But the problem was the Constitution did not allow taxation of individuals. They wrote that in defiance of England. So here you have a Constitution that says you can't have tax, but they needed to do it, so they had to amend it. So the amendment, the 16th Amendment, I think it was in 1900, said that you could be ratified. They ratified it finally in 1909 or 1913, where that Congress could levy taxes on individuals in the United States. And this became essential to help build up the government's funds to do whatever they had to do, defense, public safety, infrastructure, things like that. So the first tax return actually was 1913. I have a copy of it here, and I thought it'd be interesting to just see. This is the beauty of this tax return. This is an original, well, not an original, but a copy of it. It's only 3 pages. Page 1 is the summary, just like they have today in 1040. And then page 2 is your gross income, the amount that you derived by compensation or from your profession or from rents or from fixed gains and profits, farming, and other things. So all these different subcategories of gross income were totaled on page 2 and then posted right over here. And then you got to do deductions. This is the amount of necessary expenses paid, interest that you paid, other taxes you paid, and allowances. So that deduction was put over here. So the difference between this income and that deduction was your net income. And then they taxed other dividends and income. So at the end of the year, you had one number, taxable income, and this was 1913. And the tax on this was 1% on an amount over $20,000. And if you 20 to 50, and if you had over 50, then it was 2%, etc., 3%, 4%. The highest tax bracket was 6% of your profit of 500,000 or more. And then they had some other taxes here. And you would sign this form and down over here an affidavit and turn it into your local tax office, and they would collect your money. And that's how they went. And it was supposed to be voluntary, but it's like they called it a required voluntary form. So go figure. And eventually they changed the name to the Internal Revenue Service instead of the collections, or it was called the Bureau, to show it was more service oriented. And in contrast, today's rates are, here's a 2023, these are tax brackets. So if you earn more than $11,000 up to, up to 40, you would be taxed 10%. If you earn between 11 and 44, 12%, all the way up to 37. So if you earned, let's say, the 24% tax bracket, anything earned between 95,000 and 182 is going to be taxed. It doesn't mean the first dollar is taxed, but the first dollar is taxed at 10%, then the 12% is for money. It's a stepped up tax graduated table, but people want to know what tax bracket I am. Well, maybe you're in the 20%, maybe you're in the, but it doesn't mean every dollar you've earned is subject to that. But everything over 230 is now going to be taxed at 35%. That's why the capital gains tax is very helpful because that's limited to 20% if you have a capital gain, something you've held more than 1 year. So I'm going to give you a brief historical, overview of the income tax starting with 1913 and how we are in it today and what we have to work with. All right, so that's it for now. Thank you.